Normally I talk about the stock market. Today we're going to talk about something totally different. I'm going to talk about this. This is gold. This is a gold bullion bar here. It's 25 pounds. It's worth about $180,000, and I've got 3 of them here along with a lot smaller amounts of gold, as well as these 2 burly guards I've been married to for the last half hour. Thank you, guys. Why am I talking about gold today? Because finally a gold ETF is available. Today, for the first time, thanks to the World Gold Council and State Street, you are able to buy gold just like it's a stock.
That was Bob Pisani at the New York Stock Exchange 20 years ago on the first day of trading of the Gold Shares ETF, GLD. Since then, the price has soared 443%. Wow. Bob Pisani spoke with the ETF founder earlier today. He joins us now. Wow, Bob, that was I remember that day very clearly. It was revolutionary. Like, what's going to happen to gold? Oh, the lights are going out, Bob. Oh, there we go.
Is that a metaphor?
I don't know. I hope not.
Yeah, I had double-breasted suits, and I had brown hair at the time, so I'm really having a little trip down memory lane. Thank you, Melissa. The Spider Gold Shares, or GLD, played a very big part in expanding gold ownership. So prior to 2004, investors who wanted to own gold had very limited choices. They could own gold bars or gold coins, of course, but storage was really a problem. They could own gold futures, but that involved another layer of complexity. They could also own gold mining stocks, but there was an imperfect relationship between gold and gold miners. The GLD changed all of this. It was the first commodity ETF in the United States. The gold was held in vaults in London by a custodian. It could be bought and sold in a brokerage account and even traded intraday. Today, it's the largest gold ETF in the world. There's $74 billion in assets. So why has gold recently hit an historic high? I talked with George Milling Stanley, the founder of GLD, about that. A lot has to do with a change in who is buying gold that the GLD helped implement. When the gold ETF was introduced 20 years ago, most of the gold demand was in jewelry, about 80% of it jewelry, particularly from the consumers in India and China. But thanks to gold ETFs, the investor base who want to own gold directly has dramatically expanded. So with investors now accounting for about a quarter of all gold demand, that's a huge change. Another base of support recently has been central bank buying. It's now about 15% of all the demand as the central banks have sought to diversify their reserves. Gold was recently at an historic high, but since the election, by the way, gold is now at about 15%. So high prices for gold create a real problem, particularly when there is suddenly an increased risk appetite for stocks following the Trump victory. It means gold investors are essentially incentivized to sell their high-priced gold and put money into a stock market that looks like it has more room to run. The dollar, by the way, of course, Melissa, as you know, is a headwind for gold as well. The other big change from 20 years ago, as you mentioned, other than the fact that I had brown hair back then, was that gold bar, that 400 ounces, that was $180,000 at the time. Today, that gold bar is just about $1 million exactly. Big change in the last 20 years, Melissa.
You put one of those little gold pieces in your suit pocket, right? That's why you wore such a big double-breasted suit.
You got away with all sorts of stuff back then. You noticed that? I mean, that was actually a light green double-breasted suit at the time. We were wearing all sorts of outrageous stuff. And
you wore that well, Bob.
It was a great time.